Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a three-wave corrective structure, after which we want to see continuation of the bigger trend and new all-time highs. The three-wave structure is labeled as a zigzag, which is a 5-3-5 corrective structure. A 5-wave leading diagonal in wave A, a 3-wave corrective structure in a wave B, and then a 5-wave move down in wave C. The most common target area for your wave C is between the 1 and the 1.618 trend-based sub-extension taken from the start to the end of A to the end of your wave B, giving you a target between 52.6K and 41.9K. The most common target for your wave C is between the 1 and the 1.236, with the 1.236 sitting at 48.5K. We have hit impressive support on a weekly time frame, which is the value area high that you see on my chart, which is this blue line, because the blue line, the red line, and the blue line here come from a volume profile that you can take of this range on the left, the range of 2021 and a little bit of 2022. Value area low, point of control, value area high. Nicely respected, resistance here at the value area low, moving to the value area high, point of control breakout, and now we are retesting the value area high. Now preferably what we don't like to see is price moving into the value area, retest the value area high, and then break the structure to the downside, moving towards the point of control, as that would then also start to invalidate bullish scenarios on a weekly time frame, as currently we are looking for a 1, 2, 3, 4, 5, and moving below 38.5K would invalidate that bullish scenario. That's not really what we want to see. So it is no problem for price to still dip to one more low, but we want to see price then reclaim the value area high and continue towards the upside. But at the moment, impressive support, we have hit it. Beautiful reaction to the upside. I think it's about like a 13% bounce. Very, very, very nice. Now the most bullish scenario is a finished impulse to the downside. So remember, we are looking for an A, B, C, and the wave C is a 5-wave impulsive structure. In this particular case, we have a finished wave C, 1, 2, 3, 4, and then we have an extended 5 here to the downside, which also has the highest amount of volume. And that is an interesting detail, because a bigger corrective structure does like to end on a high amount of volume, even though in a traditional impulse 1, 2, 3, 4, 5, it is most common for a wave 3 to have the highest amount of volume, not a wave 5. So this is something that we have to keep in mind, and that is why I have a bearish scenario coming up. But the bullish scenario here is your 1, 2, 3, 4, 5. Now your wave 4 has to be this range over here. Your wave 3 has to end at the low over here. The reason is that a wave 3 is not allowed to be the shortest wave in an impulsive structure. You have a wave 1, 2, 3, 4, 5. Wave 3 cannot be shorter than both wave 1 and wave 5. However, if we move this wave 3 to the higher low here or the higher low here, then your wave 3 is going to be shorter than 1 and 5, and that isn't allowed. If we move wave 3 down here, then you can see that it passed the 1-to-1 trend-based sub-extension taken from the start to the end of 1 to the end of wave 2. And that is what you want to see. Wave 3 is now longer than wave 1, so that makes it valid. And then we have our wave 4 here and the final leg down in 5, 1, 2, 3, 4, 5-wave structure. If, however, this is the end of your wave 5 and therefore your wave C, and we are looking for continuation towards the upside, we want to count impulsive structures to the upside locally on a 15-minute time frame. And there is actually really only 3 bullish structures that you have to keep in mind. An impulse 1, 2, 3, 4, 5, no overlap allowed between a wave 1 and a wave 4. A diagonal structure where you look for 1, 2, 3, 4, 5, preferably overlap between a wave 1 and 4. Generally a deep retracement for 2 and then continuation to the upside, or a multi 1, 2, which is a wave 1, 2, 1, 2, and then eventually you get a very big wave 3 to the upside. So let's observe the 15-minute time frame and see what's going on. Now, when we look at a traditional impulse, 1, 2, 3, 4, 5, I mentioned no overlap between 1 and 4 allowed, but if we look at the low, 1, 2, 3, 4, and then a wave 5, there is overlap here between a wave 1 and a wave 4, so an impulse doesn't work, which means we immediately have to start thinking about a diagonal or a multi 1-2. A multi 1-2 would then be a 1-2, 1-2, 1-2 continuation up. In this case, we then have an impulse 1, 2, impulse 1, 2, and then we're looking again for 1, 2, 1, 2, 1, 2, 1, 2, 2. But as you can see, there's many 1-2s here. 1, 2, 1, 2, 1, 2, 1, 2, 1, and it starts to decrease probabilities, right, compared to then a leading diagonal, which is what you see here. In this diagonal, all of the waves are three-wave structures. So you then have a zigzag in wave 1, in 2, in 3, in 4, and we actually look for one more high in 5. So we want price to take out this high. As long as price is not taking out this high, the probabilities aren't really that bullish locally just yet. You want price to take out this high at least one more time to give some more probabilities to local bullish scenarios. If price would move to the downside and takes out the low here of wave 2 at 52.5k, the probabilities will increase for price to take out the lows here at least one more time, and that is the bearish scenario I have coming up for you. So currently the highest probability bullish scenario would be this diagonal, but we need to see price move above this high over here at least one more time, right? After price taking out the high, we look for a wave 5 to end, a three-wave structure, then a retracement and continuation is potentially on the cards, and the retracement to the downside should be a three-wave corrective structure, right? Not an impulsive structure. But for probabilities for the bulls to increase and the low to be in over here, we want price to take out this high over here. That is very, very important, and preferably price also moving to 59.2k, because if we zoom out to the 1 hour time frame, your bearish scenario where you're looking for one more low, right, is what you see on the chart here. So we're still looking for a wave C to end, but now we have one more low in C. So what we then have is a wave 1, 2, a 3, look for 4, and a wave 5 to the downside, and then get that move towards the upside to continue the bigger trend. Now on the chart, you can see Fibonacci levels for a wave 4. The common target for a wave 4 is the 05 to the 382 fib, taken from the start to the end of wave 3, 55.3k to 57.3k. The invalidation for wave 4 is 59.2k, it's the 0.618. The moment price moves to the upside and hits the 0.618, the probabilities increase for a finished structure to the downside and a wave C to be finished, compared to an unfinished wave C where we look for 4 and a wave 5. So that's an important detail, 59.2k here on the chart. After wave 5 and C, we then of course look for price to move up. Now we do still have some support to the downside. Of course, the most impressive support is the support that we have hit, which was that value area high, the blue box here on my chart as well, 49.7k. But down here we still have 45.2 to 44.3k, and then 42.5k to 42.9k. What I like to see after price reaches support is some signs of strength, and one of the things that I love to look at is CVD, which in my opinion is the absolute best indicator out there in the market. I have a CVD video on the channel as well if you're interested, but what we're looking for here, this is the AGGR website, more info in Discord, is CVD divergences. At the low here, right, we made bullish CVD divergences. They played out because price took out this high. That is why we have a check mark here. This is all automated. Then we had bearish CVD divergences invalidated. That's also what we like to see. Here we had some bearish CVD divergences which did play out. Price moving towards the downside, right? We took out this low, so that's why we have the check. And currently we have some bullish CVD divergences here on the 15-minute time frame. Higher low in price, but we have a lower low on the CVD on blue over here, lower high on blue, right? So that's why we have a CVD divergence. On the 3-minute time frame, You can see we have some bearish CVD divergence, so we do like to see that invalidated, right? We want price to move towards the upside, preferably with some more small little bullish CVD divergences, as you can see over here, right? So preferably make higher highs, higher lows, see some bullish CVDs coming in to complement the bigger 15-minute bullish CVD. But at least what I like to see is some structure to the upside, preferably, of course, price take out this high one more time, and some bullish CVD divergences as well. And then eventually, of course, also look for retracement. So when we then look at the probabilities of the different scenarios, then on a daily time frame, the probabilities are highest for a three-wave corrective structure and a continuation of the trend, where we are looking for an A, B, C, and then a move towards the upside. It remains the higher probability scenario compared to pretty much any bearish scenario where the bull market is finished and you look for a bigger bear market to come, because for the probabilities of that to increase, you really kind of need to take 38K, which of course is still far away, right? Only then can we really change the narrative. Now, please be aware that Bitcoin has hit the bigger target area for a wave C, meaning that this is an area of interest for potential swing longs or long positions when local price action on a 15-minute time frame is starting to show us some strength. On the 1 hour time frame, here, right, the corrective structures do like to end on a high amount of volume. Currently in the low here, we have a high amount of volume. So that is something that's quite typical for the ending of a corrective structure. And we can count a potential finished impulse to the downside in a wave C that ends at the low over here. However, we are aware that in an impulsive structure, which a wave C is, right, wave 3s also tend to have a high amount of volume, which is common for a wave 3. Therefore, confirmation is king. What we like to see is price hitting 59.2K, which invalidates a wave 4 in an unfinished impulse, 1, 2, 3, 4, one more move to the downside in a wave 5. And then we invalidate wave 4. Now take out the local high at least one more time, right? And the bullish structure on the 50-minute becomes a possibility, as we can then look or start to look for a potential diagonal, right? Generally, we have hit big weekly support. We hit the target box for a wave C. The weekly time frame remains higher probability for the bulls, looking for a very big 1, 2, 3, 4, and still a wave 5 towards the upside. We are at the lowest point so far in a big potential wave 4. So of course, interested in potential longs here, especially from a swing trading position, but confirmation is of course key. We need to locally take out the local high at least one more time to slowly increase probabilities for bullish structures, and 59.2K would be nice to hit as well. So I'm gonna keep my eye out for confirmation. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.